10 years ago, you look back historically and say, yeah, you're at 3, 4, 5, maybe even 10% annual utility rate growth. So 10 years ago, it made no sense, right? You might be offsetting 6-cent electricity, but all of a sudden we're offsetting 10, 11, 12-cent electricity. I was personally never expecting to be pricing systems in Alabama. That was not on my bingo card for 2024. But there are these underlying dynamics that have changed, and I think in a good way, because now they're not incentive reliant. So we can continue to take advantage of all those states that have good incentives, well-designed programs. But now all of a sudden we can hunt nationally, which is really exciting.
Welcome back, Solar Warriors. Thank you so much for tuning in and giving us the one non-renewable resource you've got. That is your time. As your host, it is my job to help maximize that investment. Today, I'm going to introduce you to two entrepreneurs that are taking the bull by the horns, spinning a business out of a business I'm sure many of you have heard a lot about. We're going to talk about a sector that we're all super aware of and everybody wants to chase. Nobody's got a real solid game plan because it continues to be a laggard when compared to residential and utility. That, of course, is the messy middle of commercial and industrial solar. Nick, Kerwin, and Rocky Shoemaker have spent the better part of their careers helping build businesses that are attacking community solar, utility scale solar, and really honing in on how to optimize the investment in solar for their clients. And they were bothered by the same thing you and I are, which is how can we maximize the opportunity now that we see in the largest rooftop opportunity that our generation, us solar warriors, all want to eagerly attack, because buildings create such a huge carbon footprint and the energy usage is one of the big reasons why. That is why Nick and Rocky and their team have ginned up a business called Versiris Energy. If you haven't heard of Versiris Energy, it's a new company that is a wholly owned subsidiary of a company you probably do know, New Energy Equity. New Energy Equity, of course, dominated the community solar space throughout the Midwest, most recently in Illinois, was acquired by Elite, acquired a few other companies that are friends to SunCast, and we've had Matt Hankey and Eric Posse and many others from the team on the podcast. I've never had a chance to really meet Nick and Rocky, but when I found out that they were spinning out this business as a standalone to go after the CNI market, I said, aha, I got to figure out what the heck they see and why now's the time. So we're going to dig into that today. And if that's interesting at all to you, if you want to know what it looks like to spin a business out of a bigger business, to how to address the business opportunity, build a brand around it, come up with a name for the company, all of that and more we're going to talk about today on this episode. And if you love these kinds of conversations, you are in the right place, my friend, because we got more than 750 of these founders on the front lines of the solar energy, the clean energy transition in our back catalog. You can find it all at mysuncast.com. I hope you will. I hope you'll subscribe, because that's how you'll get all of this in your inbox twice a week. But for now, let's get ready to tune up your skills, Solar Warrior, as we dig into another powerful conversation here on SunCast. Rocky, Nick, thank you so much for taking time to join us on SunCast. It's great to see you today.
Likewise, thank you.
Yeah, it's great to be here. Thanks for having us.
I'd love to get you guys to first do something I actually don't do a ton in SunCast, but I want to ask you to quickly introduce yourselves, how you know each other, how you got into New Energy Equity together, and the roles that you have played in the solar industry over the time that you've been in the industry. So how long you've been in the industry, kind of what the work environment has looked like for you, and kind of how you guys got together inside of New Energy Equity. Rocky, let's start with you.
Sure. Yeah. So interestingly enough, I've been in the industry now for 15 years, 10 of those with New Energy Equity. Actually, at New Energy Equity's inception, I was the first employee here.
Wow. You were the first employee?
The first employee. Yeah. So a storied history here. Prior to that, I actually worked for a smaller EPC in the Mid-Atlantic doing commercial and industrial installations up and down the East Coast.
Which EPC, can I ask?
It's now defunct, but it was a subset of Clark Associates.
Got it.
But yeah, dove into New Energy Equity with both feet. I actually did a project for Matt Hankey when I was with this other EPC, and he kind of liked the work so much he offered me a job when he started at NEE.
How old was Matt at the time?
He was in his, early 20s?
Early, like 23, 24?
25? No, it was 20.
He was such a kid.
Maybe late 20s, I suppose. But
I feel like when you guys had the first, like, kind of mini exit of New Energy Equity, he was still in his 20s, like 28.
yeah, no, you're right. Yeah, it was around
Like
there,
the first, I don't know what you call it, but it's when, you had a big investor come in and like buy out some of the equity.
Yeah,
of
he's
the,
been eligible. Matt's been eligible for that 40 under 40 list for his entire career.
his entire career. He's still under 40, I think.
Yeah, I think he's turning 40 later this year. Yeah.
Amazing. Yeah. We had Matt on the show a couple of times. He's an incredible leader. I remember Jim Wood, when he first introduced me to Matt, he was like, this is a guy that I should have gone to work for when he offered me a job 4 times.
Yeah.
Yeah. So you took the bait. You went to work for him, and a decade later.
Took the bait. Yeah, worked for the last 10 years. I mean, and again, it was a startup at the time.
Yeah.
There was 4 people in an office, so around a kitchen table. So we grew from that to what New Energy Equity is today, which is over 120 employees.
Amazing.
So yeah, worked my way up, and have always had a position within the company to make a difference here. So it was a natural spinoff at the beginning of this year to join the leadership team for Versiris.
Amazing. And Rocky, you've been mostly focused on the construction side, right? The operations, engineering.
Correct. Yeah.
Making sure.
Yeah. So electrical engineering background. So I kind of focus on the engineering, construction, quality control, the nerd stuff, if you will. So.
How'd you meet Nick?
So Nick came on several years ago into the NEE team out of our Boulder office, which is actually, as a side note, we should probably bring up that we have representatives in Versiris, I think across all time zones of the country at one point. But yeah, Nick worked in acquisitions, and we've worked on a couple of projects together, in a few years ago, and I think we had a really good working relationship, good synergy.
Nick, what's your story, man? What brought you to New Energy Equity? What's your background in solar, and why are you a good fit for the work that you guys are trying to do now?
Yeah, sure. So similar to Rocky, I've been in solar for quite some time. 2010. So I'm now in year 15. So I've actually done residential solar, C&I solar, been on the finance side, been in the community solar world. So yeah, I have kind of a broad experience in solar, but it's all been in DG. And so that's like really where I've been sharpening my skill set over the years. Joined New Energy Equity in 2021, as Rocky mentioned, on the acquisition team, really just focused on, acquiring mostly community solar assets, but a lot of C&I assets as well. And then, yeah, like as you mentioned, Rocky and I started working together on projects. I think I completely agree with him. We always had a good working relationship, good rapport. I think one of those things is we can be honest with each other, right?
Right.
And solve real problems together. I think we're both relatively direct, which helps a lot when you're trying to, solve real problems and nowadays when you're trying to grow a business.
The macro conversation we're having here is that effectively you all saw an opportunity, came to a decision internally. I'd love to really unpack the process you went through that culminated in saying, let's spin this business out as a separate standalone entity. Maybe, Nick, can you take me back to the moment where you started having this inkling of an idea? This is more than just what New Energy Equity is doing. This could be something different, bigger. Like, how did that start to look inside of the company, and where did the leadership of that conversation emanate from?
Yeah. So we've had a C&I division for years,
Okay.
But it's been small, right? The bulk of our New Energy Equities business has been in that community solar segment. But we've had successes, right? Like we've had major national clients, top 10 clients, public storage, for example, is a big client. And so we looked around and we said, how can we double down on this success? Like we know there is a lot of opportunity here, but we don't feel like we're taking advantage of it. And as you mentioned, we keep running into a lot of the same roadblocks that have been, inhibiting, C&I for years, for decades, candidly. But then the IRA passed, right? And so all of a sudden we have an entirely new, market dynamics. And then, we also started to see a lot of new RFPs come out, like from just a lot of different companies. And we're following this trend line and saying, hey, like, it looks like we're on this up and to the right. That hockey stick is going up and to the right. And if we can do what New Energy Equity did with the community solar markets, right, get in early, hit it hard, then we could be very well positioned to take advantage of this and really start capturing some market share across the country.
For the uninitiated, I want to just hit two things here really quickly. I try to do this throughout the interview. DG is distributed generation. RFP is request for proposal. For anybody who isn't already in the sort of the sales or construction game, so or rooftop solar game. So about when in the timeline, like, is this 12 months, 18, 24 months ago, 3 months ago? How long ago did you guys start thinking that this C&I division could stand alone and should get its own like dedicated resources?
I think those conversations started in like late Q3 of last year. And they ultimately... Of 23. And then they ultimately culminated in a decision in Q4. We made that official in December of last year. And then started 2024 kind of off to the races.
Yeah. So operating as a sort of funded entity internally with the intention to spin it out, rebrand it, and stand it up as a business. Were you guys, how were you guys picked as the leaders for that organization? Rocky, do you want to take that one?
I think there's just a lot of trust that was given that our leadership's put into us. We've delivered on multiple facets on difficult projects throughout NE's tenure, and so I think it was our ability to critically think, solve problems. It just positioned us to spin it off and be the right choice for leading it.
Let me ask it a slightly different way. Did the leadership choice for you guys to be effectively the two leaders that are going to take this business and turn it into a standalone business, did that come from you all proposing it, or was it kind of a groupthink effort and then you guys were selected as the leaders? I think there are probably a lot of folks that are thinking to themselves, like, how does this work inside of a big company like Elite or New Energy Equity?
I mean, the way it was positioned to me was, this is a choice you have. You can stay in your same role, and see what you can do on the community solar side, or you have this opportunity. We'd love to give it to you. Here's the framework of what we're thinking. And I jumped on it right away. Again, it's kind of back to my roots, right? As a C&I guy.
Employee one as well. Like, but being a lead employee, like being someone that understands what it is to be the first on the ground.
Yeah. I mean, that was the allure too, was we're back to startup vibes. I mean, we're part of a large organization, but it very much feels like a startup, which is just super exciting. You have that ability to be agile, and have fun. Yeah.
Mm-hmm. Yeah. And then just to kind of like get to your question directly, it was a groupthink piece. It was a conversation that, we were having with our executive team, that the executive team was having with the board. So there's a lot of, folks inside of the New Energy Equity and Elite, family of companies that were having these conversations. So that's how this inception story started, was, hey, like, we think there's a real opportunity here. And as Rocky said, right, given that trust that we've built up over the years, they said, we think you guys would be well suited for it. The other thing I want to add is that New Energy Equity has done this once before with energy support services.
Right.
And
we
the
had
O&M.
Marcus on.
So dedicated O&M. So again, for the uninitiated, operations and maintenance. So New Energy Equity has a dedicated operations and maintenance company, energy support services. And essentially we're trying to follow that same model, which is have one leader dedicated to, the commercial side of the business, the finance side of the business development. That's the role I play. And another leader dedicated to operations and actually executing. And that's the role Rocky plays. So trying to take that, two-prong approach from a leadership perspective, which is something that I really enjoy, because I feel like Rocky fills in a lot of the gaps that I have. And hopefully he feels the same way.
Likewise. Yeah.
Well, guys, I imagine there is a healthy amount of inside of an organization that needs to sort of prove this business case to the board, even though there is a presumptive answer that You guys were then tasked with gathering the evidence and the data and presenting back a business case to the board. Can we be a pseudo audience for you? I don't know how much of that information you can share, but I'd love to hear the supporting data that you all brought back to the leadership team to say, yep, this makes sense, and here's why. Let's go after this now. Now's the right time. Because I think that's the biggest thing is like we have friends who have thought over the last 10 years, now's the right time. And they are the folks with the face down, arrows in the back that we're now, being able to follow the actual market wave, supposedly, right? Where others mistimed the market.
I think that there was already a there. As Nick alluded to, we had a CNI division, for years we've been doing CNI, and there was, our leadership saw that there was some there. It needed to be cultivated. I think the potential for growth was written on the wall. It just needed feed and caring. Mm-hmm. That, in addition to, as we alluded to earlier, the Inflation Reduction Act opening up just a wider part of that pie as an available, market segment to go after. These were all things that are, supporting that focus that we're trying to bring to this endeavor.
Yeah, and just to kind of add to that, right? Like particularly on the IRA front, you see transferable tax credits, which when we started seeing this uptick in demand, essentially, more requests for proposals coming in, we started asking like, what's fundamentally changed, right? Like, is it just that like we're better known, maybe we're doing a good job, or are there some underlying fundamental dynamics that are in play? And so in thinking about that, obviously the IRA is the first answer. You have transferable tax credits. So now all of a sudden you have all of these REITs and these commercial real estate owners who can now take advantage of the tax credits in the way they couldn't previously, right? You have bonus tax credits, you have bonus depreciation, right? All of that is essentially just juicing the returns. There's also, the rise of corporate sustainability and ESG. That's a trend line that we're sort of following closely and riding the coattails of. But another big one that came out of that is FOMO, fear of missing out. Because we looked at the market and we saw, all of a sudden there's these top tens, the mega companies, right? Meta, Apple, mm-hmm. Walmart, Microsoft, Target, Cargill, right? Are all of a sudden investing hundreds of millions or billions of dollars in renewables. And in doing that, obviously, they're doing that for a reason. They're controlling their own energy future. They're obviously monetizing those incentives, et cetera. But the thing that I think they did for the broader market is they functionally de-risked it for Wall Street, right? All of a sudden, you go from this early adapter positioning where Wall Street might be saying like, hey, why are you investing in this, right? Is this a smart, investment? Coming at these sorts of investments under heavy scrutiny. And now all of a sudden you see some of the biggest, companies in the world, biggest companies in the country investing, not just like for pilot projects and anecdotally, but like really putting a flag in the ground. And now all of a sudden you see these corporate leaders who then follow on and say, hey, like, I don't want to miss out, right? Like, I don't want to be a late adopter here. Like, we gotta, get our act together. Clearly there's a lot of smart people at these companies. They must know something that I don't. And so while that is, kind of based in anecdote, definitely it's supported by a lot of the conversations we're having and sort of a lot of the trend lines that we're seeing. Because I think sort of underpinning the opportunity and the timing of it is that there's been a real shift in the conversation and a shift in a tone at that corporate decision maker level.
The CNI market has been, like every other market, policy driven. IRA helps to unlock a few things. Historically, CNI is driven by states like California, Massachusetts, New Jersey, New York, being typically the top four, gathering more than 50% of the market in those four states. With transferability, with the IRA, particularly direct pay, few other adder credits, it's expected that we're going to see emerging commercial market growth. 2024 is expected now more than 50% of the market will be from not those four states. And yet the CNI market still represents about 2 gigawatts a year. I'd love to hear some of the data that you guys are tracking around the segments that have caught your attention, maybe emerging states, as well as overall market size that you are expecting for the C&I market?
So like we're tracking right now, 5 to 10% C&I growth, which is in any other industry, like really fast growth. And then you compare that to residential, utility scale, community solar, and we're growing much smaller. But what that represents to us is a much bigger opportunity. The analogy that we've been using internally is that residential, community solar represents low hanging fruit, and C&I is sort of the mid hanging fruit. But because we're willing to climb higher up the tree, we think there's a bigger opportunity. So when we look out, we fully anticipate that, like I had mentioned, we are kind of right at that inflection point in the hockey stick, where all of a sudden, 2 megawatts is going to become 4, become 10. I'm not saying that C&I is going to eclipse utility scale by any means, but I do think we finally hit that inflection point where we're going to start seeing double-digit growth rather than single-digit growth on an annual basis for some of those reasons that I had previously articulated.
Yeah,
and so that's the big thing. And then you had mentioned states. It's interesting, like it's not just the states that are healthy for C&I solar. All of a sudden, like we are pricing projects in Alabama and Indiana and South Carolina and Kentucky. And that I think is really driven by the fact that rising electricity rates combined with, some of these underlying IRA incentives have sort of fundamentally changed the economic outlook. Right. 10 years ago, you look back historically and say, yeah, you're at 3, 4, 5, maybe even 10% annual utility rate growth. And so 10 years ago, it made no sense, right? You might be offsetting 6-cent electricity, but all of a sudden we're offsetting 10, 11, 12-cent electricity. And so we all of a sudden are finding ourselves in a place where we were never, I was personally never expecting to be pricing systems in Alabama. That was not on my bingo card for 2024. But there are these underlying dynamics that have changed, and I think in a good way, because now they're not incentive reliant. So we can continue to take advantage of all those states that have good incentives, well-designed programs. But now all of a sudden we can hunt nationally, which is really exciting.
So we understand that it looks like there's a tailwind. There are certainly new market opportunities. I'd love to hear some of what you perceive to be the inherent challenges. What are the things that have historically held C&I back? What do you anticipate will continue to hold C&I back?
Yeah, I mean, there's definitely inherent challenges with different sorts of, C&I installations. We would all love those flat warehouse roofs and just do those all day, but that's just not how the world works. So we're oftentimes faced with challenges with roof ages. Setting expectations with business owners and corporate owners as to like what you're gonna get with a commercial industrial installation.
Yeah.
So making sure that those expectations are aligned is a challenge, and it's education, right? You have to be willing to educate your clients as well. So we have a great team of engineers and project managers to tackle those issues, but that's definitely a challenge because you don't want to spin your wheels, right? And you don't want to waste your time or your client's time, but you do want to offer the smartest solution you can. So that's sort of part of the secret sauce too, is getting the right solution in place.
You have to optimize for a portfolio where increasingly for C&I to work, the hard part, and the part that we still probably won't figure out for another 3 to 5 years, is how to tackle the 30 to 300 kilowatt system sizes, right? Like everybody right now is chasing after the portfolios, right? That like Nick said, try to go from 2 megawatts to 20 megawatts. But if you think about like what Nick said, 5 to 10% of growth, a year growth, 10% a year growth is 200 megawatts in market growth, which for those, again, who are uninitiated, imagine, how do you put this into context? That's 10 projects at 2 megawatts a piece for 10 companies a year, right? 10 new companies or 10 existing companies who grow that much. And that is not an insignificant challenge. Like doing a 2 megawatt project, one a month is a challenge for a construction team, right? Even on the ground, let alone up on a roof and all the complexities that come along with that. Are we, as an industry, are we ready for that level of scale? Like if we see the kind of growth, thanks to tax transferability, et cetera, that residential saw when we finally unlocked, capital markets for residential finance, do we have enough companies to actually address the market?
I firmly believe so. Yeah. I mean, I firmly believe we do. And I think that, that's part of our strategy is to forge relationships in different parts of the country with trusted partners to help, fulfill that demand, and build out a capacity of that size. It's certainly our goal.
Yeah. And Nick, what about the commercial side of it? Utilities are emotionless. So are boards of businesses.
Yeah, utilities can be emotionless. That's true. Boards are made up of humans who are emotional decision makers at the end of the day. It's nothing like residential. Having started my career in residential, I know full well we are not making a lot of kitchen table decisions. The value proposition is fundamentally different. Mm-hmm. But I think the corporate challenges really lie in a few things: incentive alignment, capital availability, and really the biggest thing and the biggest challenge historically has been this real estate challenge fundamentally. So the vast majority of real estate in this country is owned by REITs and commercial real estate owners who don't occupy, right?
Yes.
And so you end up in these dynamics where it's, can we sell a REIT on on-site solar that maybe we can lease their space in incentive-friendly markets like Massachusetts or New Jersey. We can, it's just another income stream for them. But if we're not in those, incentive-rich markets, then all of a sudden we have to kind of change that dynamic. And so the dynamic changes in one of two ways. It's either, hey, commercial real estate owner, why don't you invest in solar? And then now we can charge a higher rent. So that's fundamentally really difficult because you're asking people to change their business model, which is a big lift. We're starting to see, I think, the early stages of that. But I think the real opportunity is the owner-occupied space, right? These large corporates that own their own real estate across the country. And Rocky kind of alluded to it, but I think historically the other thing is that in the solar industry, we love low-hanging fruit. We love to go after the thing that's right in front of us and obvious and exciting and the next big shiny thing, right? Am I going to focus on, the harder problem, or am I going to focus on the thing I think I can make money on immediately? Yeah. And so that's also led us to, really be focused on these incentives, like chasing incentives. And I think that now is again that time because of rising electricity rates, because of Wall Street shifting dynamics, a ton more capital coming into the market. Sort of that has fundamentally changed the mix. And so now all of a sudden we can look nationally. And I think that's where this other big shift is happening, is we're no longer just chasing incentives. It's now about providing on-site solutions across the country. That doesn't, eliminate the challenges, but it certainly helps, when we look at that 200 megawatts of growth you're projecting, maybe that's 300 megawatts. And next year, maybe that's 500 megawatts, right? So that certainly can help kind of juice that trajectory.
Nick, you mentioned a phrase, a terminology that I hear a lot lately, on-site power, on-site energy, instead of saying something like rooftop solar. And that, I think, comes from the fact that, C&I and building owners, operators, and managers, they think about the entire sort of what encompasses their energy infrastructure. Let's be honest, most of these buildings, the extent of on-site power is whatever level of energy efficiency they've done, lowering their bills for lighting and variable frequency drives, and then adding some sort of usually gas backup generating power. So we have to think about the way that the language that they use. This on-site power also is important for data centers, et cetera, when we think about resiliency and microgrids. So I'm curious from Versiris' perspective, the expansion of service offering we need to think about as an energy industry beyond just solar to really give C&I customers a a full wrap service, right? What do you see customers asking for, and how are you guys preparing to enter into the CNI market with a complete service offering that really is kind of on-site power?
I think fundamentally that we're talking about storage, right, as the first piece of that puzzle. And obviously we can be talking about EVs and, energy management systems as well. But the big kind of thing right in front of us is storage. And so when we're thinking about storage today, we're really thinking about taking advantage of arbitrage opportunities, right, that you might see in a place like New York City or in California. Both of those places right now, they pencil and they make a lot of sense. You have a state like Massachusetts where it's sort of fundamentally mandated that if you want to participate in the SMART program, you got to have a storage component for large systems. But beyond that, right now, it doesn't make a ton of sense financially if your only motivation is financial to go storage in a lot of the rest of the country. But I think you also alluded to this idea of resiliency, which is actually really important and allows us to position ourselves in an interesting way. Because we can think about hospitals who can't let those, lights go out. That's obviously critical. Oftentimes they might be triple redundant, and storage can provide a real service for them. Or retirement communities similarly. We saw Florida recently take on new legislation mandating backup power after some of what was happening in the early 2020s there. So certainly those trend lines are continuing, both from a demand side perspective on the customer side, but also on the policy side. And then you alluded to data centers, and behind data centers is also AI, which represents these huge opportunities. Data centers can't go down, right? And if they do, like these big companies that we already talked about, Meta, Facebook, Microsoft, et cetera, they're no longer delivering the service. So that represents a huge opportunity in terms of being able to do that full wrap, because resiliency has a fundamentally different economics if your business says we cannot lose energy. And so, that's how we're thinking about it in the short term. And then obviously in the long term, as, prices continue to come down, that's going to change, dynamics over the next few years as well. And anybody who's been paying attention to the storage market has seen precipitous price declines that we can expect to continue, but also we're seeing more and more utilization. So that supply demand curve is, continuing to balance out.
So Rocky, I wonder from a construction and buildability perspective, one of the biggest hurdles and challenges that we have apart from siting community solar and utility scale projects is interconnection. How does interconnection or maybe even other on-site challenges complicate or come into play for you from buildability perspective when you're thinking about the kinds of markets you all are going to go after? You have to give Nick and the team feedback on what is the lowest hanging fruit, what's the easiest to go after first, and how do we think about the challenges that the CNI market present with regards to on-site interconnection, regional nodes, et cetera?
Yeah, no, I think it's great that we've had experience as a community solar developer first in new energy equity with navigating the interconnection process in arguably what's a more complicated scenario, right? Community solar, larger projects have complicated interconnections, often costly. And when you look at the CNI sector, from my perspective, the complexity reduces. We have the benefit of having forged some of these relationships with a lot of national utility companies, and after going through several interconnection processes on that CNI side, you see it's much less arduous. So I think the challenges are less. I think it's actually refreshing, if you can call dealing with the utility company refreshing, to do smaller commercial industrial interconnections. Oftentimes you don't run into those challenges of capacity limitations that you do when you're installing larger systems.
Nick, I wonder from a commercial perspective, is there anything that you use as a lens it just makes it easier for CNI compared to community solar, and maybe a lens for how you and the team focus commercially on one region, target market or other aspect demographically to pick who you're going to go after?
I mean, obviously economics are going to be driving a lot of that. So we'll do market level detailed analyses on all those things. And then looking for commitment, like what is the commitment level of these organizations that we're targeting? So, I mean, to be honest, it's a lot easier to sell a company that has sort of indicated a level of commitment, whether that's in their, sustainability reports or ESG reports. Maybe they signed up for a VPPA, right? Maybe they've done some things. Maybe they've done an energy efficiency project or some EV projects. Maybe they've already, in a different state, they've done on-site solar. Obviously, it's a lot easier to convince those folks who have gotten comfortable with those ideas than to do that full education, bringing somebody from point A to point Z. It's a lot easier if we can catch them at point M and get them back to point Z.
When I was developing solar projects back 2008 to 2015, the thing that I frankly hated about CNI, even though it's the segment that I focused on the most, was this 3-letter word that you used earlier, RFP. Are we still in a world where, despite sort of virtue signaling with ESG targets, et cetera, that give you an idea that this company is potentially going to be a good candidate, we kind of still have to wait for them to issue an RFP? Or is the market maturing such that you can send out a sales force and prospect and not expect that the company is going to always go and get 17 quotes?
Yeah, I think that's a both and question, or both and. I think that's a both and answer. There are certainly companies, the big ones, especially, who are going to run their RFPs. They might not get 15 quotes, but they probably are going to get at least 5 or 10. But participating and being able to be competitive in those situations obviously is critical for Versiris Energy, but also for anybody else playing in the market, right? Local, national, et cetera. But no, I do think there's fundamentally also this opportunity to engage with corporate decision makers at this direct outreach level, where we can foster those relationships and get folks comfortable. So, I do think it's always good practice to get a couple quotes, but obviously it's a much better situation on the sales side to be selling in a non-RFP situation where you have an opportunity to really lay out that value proposition besides just the dollars and cents, and really be able to lean into the value that's going to be created, the problems that will be solved, right? Rather than just levelized cost of energy and cost per watt, which, let's be honest, those are going to continue to be the major metrics that a lot of these decisions are going to be based on. But I think you hit the nail on the head, which is, we are moving out of this dynamic where it's just RFPs into a dynamic where it's a both and.
I think too, Nico, you said RFP with this nasty look on your face, and I understand why. Because so part of the challenge that we see is sometimes you just get unqualified RFPs or RFPs for projects that would never happen. And so there does need to be a level of scrutiny that we apply to it when we're looking at RFPs. And that also offers an opportunity to help educate the corporates on, hey, this is what you actually need. This is what you're actually looking for. So we've had that opportunity. We've had success doing that, and it makes the RFPs a little less icky.
Yeah. I guess it's just if I could have all the days back that I wasted on RFPs.
Well, particularly those unqualified RFPs,
my late 20s would be a lot more focused.
You open it up and you're like, this is never going to work. And then sure enough, they get 10 proposals and decide not to move forward.
Exactly.
Those will give you gray hairs for sure.
Yeah. Well, sticking with the theme of hard things, spinning a business out as a standalone division of a company like New Energy Equity is by no means a walk in the park. I'm curious, what's one of the harder or hardest things that you found in creating the company? Anything that stands out to you?
Yeah,
finding the name.
The name.
That was the hardest part.
Well, tell me about that. What's in a name?
We had no idea. Go ahead, Rocky.
Really, we went through a process of polling our team, surveying the team to what really matters and what was our core values that we wanted to put out. And Coming out of that, was integrity, truthfulness, honesty to our clients. And verse is the Latin root for truth. And iris is, symbolic of, vision and foresight and seeking. And so we really want to spin ourselves as truth seekers, So this is that's what's in a name.
That's really cool. How many names did you go through to get to Versiris?
We seriously looked at over 600 names, which is something I had no idea it was going to be so hard.
Amazing.
But yeah, there's so many great names that have been taken by tech startups and by other solar companies that time and time again, we would think, oh, that's a great name. And then we'd go, look it up and there's a website. And we'd go look up, the LLC and, oh yeah, that exists in 4 different places. And so time and time again, we kept running into this, it's taken.
Yeah. Well, as you pointed out, it took you 10 months to
yeah, no kidding.
I'm joking slightly, January to October, I think, when you guys officially
you got to build a website and, get a logo. There's a few other things in there. Yeah. But, no small task.
No doubt. So you guys, obviously you two are the senior leaders in the organization. You're by no means alone. How many folks spin out of New Energy Equity to join you at Versiris?
I believe it's 14 in total. It's 14 in total, so still a small team.
Yeah.
But then again, we have the benefit of having a whole back office of business services support. We have
unfair advantage.
We have. It's not an unfair advantage. It is an advantage, though. I mean, it's something that we're relying on. To be competitive, right? I mean,
to be clear, if I start a CNI business today, I have not got that advantage. So
That's
I would
true.
consider it.
Yeah.
I would consider it your unfair advantage. That's fine. That's what business is built on.
Yeah. I mean, the business is only as good as its ability to be competitive. And
Correct.
That definitely represents a competitive edge. We have a whole team of legal and real estate and just a ton of folks to lean on.
Yeah. What do you think is most important at this stage of the business in terms of the culture you want to build and the direction that you got to give this birthing of a new entity?
When we stepped into this, we obviously were able to inherit the CNI team and a lot of the successes that they had. But we also brought in new talent onto that team. And so in December last year, when we were officially spinning out, Rocky and I got together and talked a lot about culture. Because we recognized that having, a good cohesive culture was going to be the underpinnings of whether or not we were going to be successful. We're ultimately trying to build a culture where everyone is rowing in the same direction, where there's trust, where there's not silos, where, when we need to dig in and, roll up our sleeves and, it's a fire drill and we gotta, stay up late and get that RFP out because we have a huge opportunity. That's the kind of, culture we have. But at the same time, a culture that, values and respects time off and respects time with the family. So that we have that, sort of inherent work-life balance built in, recognizing that we're still trying to grow this business. There's going to be those moments. And so creating that balance and that trust. And I personally think that's been one of the kind of real joys of this year, has been able to, seeing that and participating in that and seeing a lot of that come to fruition, and just seeing the culture, start from a good place. But we just had our, Q4 planning out in Annapolis a couple weeks ago. And it felt like we left that in just a really healthy place. So yeah, that made me excited looking at the future.
I think it's also important to note too that the identity, the identity that we've given ourselves is that wasn't something that was asked of us by New Energy Equity leadership. That was a decision that we came to as a group together to rebrand and sort of give ourselves this new identity. And so, supporting that and really leaning into that, I think has been great for our team. It's given everyone a sense of identity that's just really resonated with our mission.
Well, I remember the first time you guys told me in hushed fashion the new name that was not public yet. I immediately thought, wow, actually, that sounds like a really professional name and energy company, right? It was like, it's hard to square that challenge. And I think it's important when you are going up against some really big incumbents in the marketplace, right? To come out with a new brand rather than to sort of stick with the new energy equity or the elite branding takes confidence and courage, takes a great team. And, it seems from what I've seen, obviously you have the pedigree, you have the track record. I think that probably Matt and the team would say that they will know that you're doing it right. And this may already have happened when folks at New Energy Equity and Elite are going, can I go to Versiris? Right? And I imagine that's already happened once or twice.
It has.
Yes.
And conversations are underway as we speak. So yeah, your intuition is strong there, Nico.
Yeah, that's fantastic. That's fantastic. So at a technology level, I wonder as we begin to bring this to a close, is there anything that you see on the horizon that really excites you? Maybe, Rocky, you're looking at more of the technological advances that building owners are really considering. What is maybe new and exciting or non-obvious about the way building owners and the C&I market will evolve that on-site energy has to take into consideration?
Yeah, one thing that immediately comes to mind that I'm particularly excited about is the implementation of the new UL standard 3741, which actually provides a pretty clear path to avoid having to use rapid shutdown devices on rooftops. So through smart design, that has made its way into the technical specifications of some of the larger clients that we work with. And it just represents, lower cost and less points of failure. And, I don't know. I mean, anybody in the solar industry will tell you they probably have seen a failed rapid shutdown device. They don't look pretty when they do that. So I'm personally excited about that, as a breakthrough, that UL listing.
All right, guys. I've learned so much here in today's conversation. I want to wrap with a couple of final questions. We've talked a lot about kind of how you guys have thought about the business that you've created, and you've given some lessons learned to others that want to follow your path. What's one thing that you want to communicate to investors and maybe even building owners who are eager to get into this asset class?
Yeah, that now is the time that we are at the inflection point. You might look at historicals and say, hey, I'm not nearly as excited about 5 to 10% growth, but recognize that all of a sudden that is, that could easily be 10 to 20% growth. And so from an investor standpoint, I think huge opportunity. On the commercial real estate side, go back to the IRA, transferable tax credits, bonus depreciation, energy community. There's a ton of extra incentives that make this more, valuable. But also you're going to be rewarded for investing now, because energy prices are only going up. So yeah, be a part of that wave now.
I think also there's a cautionary tale there too, is to investors and business owners is to do your homework and really know who you're partnering with. With any market growth, you get a lot of entrants that don't cut it, right? And so you do have to be careful, do your homework, look up track record, look up quality assurance, so you're sure to partner with the right folks.
Yeah. And then to those who, like your colleagues over at New Energy Equity, are eager to do a career shift, maybe folks that are working in another sector and they're looking at solar and they're thinking, maybe now's the right time. What would you like to communicate to someone who's thinking about getting into this industry and getting a job at a company like Versiris?
I view it as just unlimited growth potential, honestly. I mean, at the very beginning of my career, you look at it as the sun is just a giant ball of free energy. And so that's a business that, will just keep growing. So, from my perspective, it's just, there's a ton of growth potential.
Yeah. And from my perspective, New Energy Equity, our parent org, has multiple people on the team who've come directly out of oil and gas. These folks looked, our land team predominantly, but they looked out at the market and said, hey, do I want to continue to ride the boom bust of oil and gas? Or, do I look at the solar market and see a 10, 20, 30-year trajectory of growth and stability? And that's where I want to continue to grow my career. And Versiris is obviously a natural extension and a great landing place for folks who want to join that team.
Excellent. Well, gentlemen, my hat's off to you. Congratulations on successfully standing the business up. I wish you the most luck. And I know that you really won't need luck because you've got a lot already going for you. I really appreciate that you've taken the time to explain the thought process, not only behind the market opportunity, but how you've put the business together and give others insight into this entrepreneurial journey, something that we don't really get a chance to pull the veil back and get a glimpse into. So Rocky, Nick, best of luck to you. Thanks for joining us here on SunCast.
Thanks, Nico.
Thanks for the time today.
Well, now you know what it looks like to take a business idea inside of a bigger company and spin it out into a separate company. Obviously, we didn't go over all the details, but I'm super grateful to Rocky and Nick for taking the time to give us a glimpse inside what it looks like to actually come up with this idea, get buy-in from the executives, and spin it out as a separate company. By no means a small feat. We've had numerous conversations here on the podcast with other entrepreneurs just like that. I will try to see if we can link down in the comments below, but I remember we had Gareth on who talked about taking his business out of a major engineering firm and standing up a CNI software platform. And even years back, we had the folks from Versiris Energy who spun their company out of SoCal Edison. So this is a common theme. I often talk about the entrepreneurs on the front lines, but the entrepreneurs on the front lines of clean energy transition as well, who are taking business ideas incubated at bigger companies and spinning them out. You can do that too. If you have any questions about how, ask me in email. You can send an email to podcast@suncast.me. If you want to chat with me, go to mysuncast.com, click on the Chat with Nico button and book a call. Thank you to Kirtan, who recently booked a call with me. Good luck with your CNI business. I hope that you crush it. Good luck to the guys from Versiris Energy as well. I agree with them. I think now is the time to strike. The CNI business is ripe. We have been focused on commercial industrial as a sector. Nearly 50% of you as listeners in some way have exhibited interest in the commercial industrial sector. And, I think the time is right. You are in the right place. And thank you for tuning in. I hope this was beneficial to you. If you'd like to see more content like this, or if there are folks that you think we should be interviewing that we haven't had on the show yet, I only get 52 Thursdays a year. We could do Tactical Tuesdays. It gives us another 52. Maybe we spin out another podcast. Got ideas? Let me know. I've had numerous folks pitch. If you want to be a host on a show that you think we should stand up as a podcast, or if you are a company that wants to start your own podcast and you'd like us to help you, our Resource Labs team would love to contribute. I'd like to say thank you to also the folks that help make this show possible. That is our sponsors. They pay the bills so that you just have to pay attention. And then last but certainly not least, thanks to my amazing team, Chris Mottram, our editor, Jeremy Pingle, our executive producer, Herman Chalet, our podcast producer, our wonderful content team, Matthew Corpus, Michaela Redlin, and so many others behind the scenes that help make this show possible. Thank you to you as well. You are what you listen to. Thanks again for showing up, Solar Warrior. It's half the battle.